Good. I hear you now. I caught the last 2 minutes of your show on YouTube, and I had no sound. Hmm. No, I didn't know how to contact you. I mean, I checked my phone and accessed YouTube, and I still didn't have sound. Okay. Big beat's gone, and you're falling apart. Yep. Okay.
Hello, hello,
Well,
hello. There it goes.
I hope everybody read lips. I, I figured you would. Well, you'll have to recap. Yeah, well, I can relate. I did not know. Yeah, yeah. Well, good. Let's we could open with the dollar. Money moves first, and I'll give you my. All right.
Good morning, Quasar Markets Live. I am back, and this time you can actually hear me. I am here with Stephen Flanagan, our FX expert. Money moves first, and man, the dollar. You didn't tell me it was going to do that far.
Yeah, we
Yeah,
talked
we
about
talked
this
about this
108
108
level
level
on Wednesday. I had thought we'd have a gradual possible move to that high, but you know, having hit now a high of 108.07, we're traced back to 107 and a half ish. You know, it is starting to percolate and move fast. And I'm going to emphasize money moves first. Watch out for the vacuum trades we are about to enter. And if you look at the US equity market, we're beginning to look like the possible same type of trades. I did read some of your lips in that earlier clip you had. And I saw you called out a number of stocks that are beginning to really move.
Yeah, we're seeing it. You're seeing things play out without a doubt. I have one to ask you about that I was looking at earlier. I'm going to put it on the screen. ASML, because it's one of the chip ones that got beat down because it's a European stock. Everything there is suffering. Are we getting to the point where this could be, or what is your idea there? Not necessarily on ASML as a company. I don't want to put you on the spot to that, but more about, is the Europe trade now? Did this send us to where maybe the Europe trade's back in for equities a little bit?
Not yet. No,
Okay.
I'm dire forecast for Europe right
Okay.
now.
Okay. Well, that's why we have you on, and that's why I wanted to lead with that because I just have seen what SMCI. If you followed that all, that bounce back that it made, CrowdStrike after everybody that gets this catastrophic black swan event that turns out to not be the death toll that everyone thinks it is. These things have rocketed back, and I want to be on the right side of that ASML because it's what, the second or third largest company in all of Europe.
That's correct. And we did emphasize this in Lagarde's speech earlier this week, where she actually highlighted to the EU that, how many of the top companies do we have? I think it was three, and this, of course, being one, but emphasizing how Europe is falling behind in this new technology race. So, and that she speaks today before the European Parliament or Congress. So we want to watch that carefully for her speech if she amps up her tone. But this is coming on German GDP plus 1.1%, now operating at minus 0.3 for the year. You've got UK retail sales shocking to the upside, minus 0.7%. We'll separate the discussion between the Eurozone and the UK. And the UK isn't far behind, but let's just put that one on the side.
Okay.
Now we've got a lot of talk about France because the European Commission came out and it looks like they're going to give them the pat on the back and say, it's okay with your deficit ballooning above the Maastricht limits, but we think that you've got the right mix here. And they're ready to raise taxes by $63 billion along
Wow.
with spending cuts. How in earth is that going to help growth?
Right. No. And I have to point out is I have the euro on the screen. I mean, you nailed it at that $1, 103,358 is about exactly where it hit. You're off by, on the fourth decimal point by about 2 or 3 spots. So let's get it a little tighter next time. I like to go 5 decimal points personally, like Bitcoin. So, but yeah, you nailed that to the T. Do we retest that 103,358, and are we headed lower to are we, is this the bump that's going to send us to parity?
Low so far 103, I think around the 42 level. We talked about 104.50, which was the October 23 lows. So a break of this psychological, in my 43 years of trading, and remember the euro only came in at 1999. This 103 level was always a magnet when it hit for the quasi governmental agencies, which are rampant throughout Europe. That's a story for another day, but
Yeah.
they all need to come in and buy the euro down here. This time around, though, the economic backdrop is completely different from any other one. And I look, if the 103 level breaks, you'll hear me mention now a couple of times with currencies, we're ready to hit the vacuum. A decisive break of 103 with a close below is going to hit us into a vacuum down to around the 99 and a half low, which is revisiting your November 22 lows. That's where the euro is heading. In my forecast, I am thinking that we could go significantly beyond that if we don't begin to see concrete actions on the Europeans' behalf here. What is going to happen? You've got France suggesting massive tax increase with spending cuts. That can't be, that's more restrictive. So the pressure is on the ECB. They're going to have to begin to get cuts. They're at 3.25% now. I'm looking probably for them to hit somewhere in the low twos. That's the only thing that would make sense to get the euro to probably create some sort of base. At that point in time, that's where you may look for that diversification into equities in Europe, like an ASML.
That makes all the sense in the world. So you heard it here. You saw those levels. If you saw as he was talking, I pulled it up. Here's the November. You can see in October of that year, it actually got down about 95 cents in the middle of COVID. So it'll be interesting to see if it does gain that support or if we break right through it. Next, you said a little bit about the sterling, because I was going to bring up that isn't performing much better today either. It's down about a half a percentage point also.
So a very large traded currency pair within the European hemisphere is the euro sterling cross. So at this point in time,
I have that here.
as this point in time, as the news is getting very negative in Europe, with the UK perhaps 6 to 9 months behind, is play and hedging is to stay within the hemisphere, is to buy sterling and sell euro, or sell euro sterling. We would that's the way it's traded. So that's the currency pair. I do think that sterling is also a little bit slower, but we've had a low of around the 125. Support comes in around 124 and a half in sterling. And if we break this level, we're perhaps targeting in the April lows of this year at 123.30. And
Okay, I
that's
see that. That actually comes up as a support level on mine that I've already sort of targeted out. So I'm right there with you. Look at that. Look at what you've taught me in such a short amount of time. I literally had 123,475 targeted.
currencies are great to chart because you can look at these, and I'll boil it into a very simple discussion, and you can apply this really in anything that you are charting. You look for consolidation zones. When you see consolidation zones, let's keep it simple. Buyers and sellers are fighting it out.
Yeah.
When one side breaks, that one side that loses, that will always become a strong resistance zone. Keep in mind, when people are trading currencies, often they're trading with a much more macro type view and a much longer term
View.
perspective. Right. So that's why these levels come in. And you can see in the chart you have up, if you look at that consolidation, once it broke, it made its decisive move down. Any retracement back up into that zone initially is going to be a good sell zone.
Absolutely. I'm a huge fan of former support becomes resistance, former resistance becomes support. If you can get it in the same zone as a huge MA, also a 200 or something there, then you really got the lines in the sand, so to speak. And like you said, when it makes the move through them, as you see here, it's a pretty explosive move, on either side of that for most things. I will say, as you know, I've done these charts with you, over the last couple of months and been looking at them more. I do find that charting on these is, I'm picking it up pretty quick, that it's there. It's not, I won't say it's easy, but what it is you do see like you said, it consolidates in a zone, and when it breaks out, it goes explosive. So you're looking for those, what I call the symmetrical triangles. When you see that consolidation come down, that's where you look for the breakouts. The other thing that I'm learning that you seem to, like you said, now we know money moves first, but money also looks at more of it seems to me, a 3-month window versus a 3-day window that we sometimes see in that equity market. Would that be a fair statement also?
That is a fair statement at times, although when a news blurb comes out and hits the screen, money does not look at a 3-month. It's
right. No, it moves first, like I said. But it's more about, the time horizon. It seems like when you've talked about these trades, it's been, you pointed out about a month before it hits. It plays out, and then it takes about a month to, make the big move to where you had been looking at there. I guess that's what I'm sort of saying in the lifespan, whereas I'm used to equities where you're playing that out over a day or two for a lot of these moves that I'm looking at, because I'm playing volatility versus, a continuation. But like that SMCI would be a perfect example of it followed sort of the routine that I see more play out in the currencies. It consolidated. When it broke out, it was explosive, and you had time to sort of see it play out in front of you a little bit. But like you said, yeah, any kind of like news, like you can start. I mean, all you gotta do is pull up DXY. I mean, today didn't see how it moves first and it moves fast. I mean, that move right there in one day from under 107 to above 108 is huge.
The thing about currencies, and again, I love to keep my analysis in a simple fashion because that's what helps traders that are beginning to trade currencies, perhaps a lot of your viewers that are beginning to even think about trading. If you just simply put the baskets up and you use your economic fundamentals, your GDP, your retail sales, and any of us can look at those, they're published figures, and you put them in, and then you begin to start to get a weighting. Then the most important factor is you add the interest rate difference between the currency pairs. And
Right.
what you look for is an oversold or overbought condition where an interest rate favors one currency over the next. And this is what we call that double bang. And this is what your global investors who have trillions under management
Right.
look to capture. They look to capture a higher interest rate currency that gets an appreciation. And then they take that move, say, into the dollar and invest it within the dollar. You not only get a dollar exchange rate appreciation, but your asset will get an appreciation as well. And
Right.
that's the one key driver in currencies that you can get, look at that chart, a very long trend on and
Yeah.
catch those type of moves. And those moves can add up to big money.
Well, like you said, yeah. I mean, they're leverage plays. I mean, there's no other way to term it. It's like we talk about when it comes to a crypto play or something else, where they're borrowing U.S. dollars to buy Bitcoin. It becomes a leverage play. You have that built into that market. That's what it is. We're following the forex a little bit, where with Bitcoin and USD, you're playing. For years, my thing was I don't have to outperform the U.S. dollar. I have to outperform Bitcoin.
That's
When I was trading other cryptos
right.
there, because I thought we were moving in that way. Uh,
And
you know,
and it's simple mathematics. In the older days, we used to trade in minimum of 1 million lots. Today, the
wow.
market has been opened up to retail investors, so people can trade in lots of 10,000 and perhaps even smaller on a number of the sites. But you can just look, if you make one big figure in the euro dollar selling $1 million, you make $10,000. And
Yeah.
that can happen in seconds at times.
Right. Yeah, you picked them right. It must be a fun day at the office on those days, huh?
Yeah, and in my previous job, we trade in much larger multiples of
Oh yeah.
of
Yeah, I can't even. Those amount of zeros just would give me a heart attack. I'm a guy. I like the $10 tables at the casinos. I don't like anything bigger than that.
Yeah, yeah. When you're trading your own money, you trade in a much more risk adverse
First
style.
way. Yeah, absolutely. It's funny you bring that up because I've noticed that, that one of the bigger trends in day trading also, of course, is the advent of these traded funders where there are private equities that are willing, if you can, jump through some hurdles through them, hit some goals that they'll give you, anywhere from 100,000 to $1 million of their money to trade, and you get 80% of the profits. They keep 20, and this whole thing. And I have noticed traders that once they qualify and now they're actually trading with the other people's money, that like the weight comes off their shoulders a little bit. It's interesting to see. Um, you know,
OPM, we call that OPM.
See, for me, it was
Yeah,
harder when I was doing the live trading room at Prosper, and I knew that I was giving signals that people were following with blind trust. I always tried to tell people, I'm just here to teach you to fish. Please don't just add on to my line another hook, but learn the tools that I'm teaching you. And you knew a lot didn't. For me, it was more pressure because I realized, not only is my money at stake, but I feel bad for the 110 people that are trading my signals on a daily basis.
yes. Mirror trading is something we referred to that you're talking about. The other one was OPM, Danny DeVito from that movie, Other People's Money.
Oh yeah.
Um, the thing is that when you trade in those environments, remember that when you hit a loss level, you are automatically taken out because obviously the firm that's given the leverage is going to protect their money. So,
Oh yeah,
uh,
they have, and in those traded funder things, same thing. There are once your drawdown per day you can only be an amount. Drawdown per a trade can only be X amount. You can only do so much. What they do is they produce people that become tick scalpers. And you're familiar, I'm probably sure with that. Like I have Charlie Moon, a good friend of mine that worked at Prosper Trading with me. When he started trading, he worked for a tick, a company that worked like that on stocks, and where they just watched numbers. It wasn't even charts. It was just numbers, and they had numbers that where when it hit, I'm just going in like that and scalping 3 pennies and I'm out. It's like you've talked about with the quant trading.
in the 80s and 90s, that was my primary job as well. What we didn't call it tech, we called it pip trading
Okay.
because each pip was a point, and we would pip trade, and that's yeah. I mean, it's a if you've got the ability and an intuitive type of trading style, this can be very prosperous to you, but it's short lived, and you live by the second.
Right. And the
And
other thing they always say there is, or that I like that Mike Shore always taught me was don't try to pick up pennies in front of a steamroller. Is
you bet, yeah.
those guys tend to be momentum. They watch VWAP a lot. Like I'd watch Mike who does short term options, so he plays open blind, a uncovered option on usually a highly traded stock, QQQ, SPY or whatever, and they're looking in the morning to just see what VWAP does, and if it crosses VWAP, confirms over VWAP, we're in. And it's a very structured trade, like you said. You have to be so structured. This is my stop loss. It goes in as I make my trade, and so does my take profits. And you know what I mean? And he's immediately, and it's funny to watch his trading room because when they're in a trade, like again, it's move your trade stop up to this, move your trailing stop up to this, adjust this. It's just, you got to be in that sucker like it is your life because it is. It moves so fast, and they're doing it at again a levered situation because it's options, blind options. So yeah, it's an interesting world. It's interesting to see what other people do and the millions. There's hundreds and hundreds of techniques. What I love here at Quasar is I get so many people like yourselves that are experts in different fields in different parts of the industry or have different trading, philosophies. Guys that are undercut and rally guys that are delta neutral and trying to win on gamma and theta or whatever else. We have short-term options. We have option volatility players. We have a guy that just he is at that first level of risk where he buys a stock and sells covered calls against them or covered put or cash um, puts. And Dr. Ellman is an expert at that world, and there's just so many wheel trade. We have this guy Jeremy Vreeland who only does wheel trades. It's amazing to see all of the different ways that the Wyckoff people out there, over the years. It is interesting, but I think that they all have one thing in common, and that is understanding structured trades. Whatever my thesis is, I stick to it.
Yep. And so here's what I'll say. Having been at the driver's seat when the money moves first world, so everybody else is in the back seat and you're at the front.
You're driving the bus.
I'll go out and I'll give an example that hasn't happened yet. So let's see if I can offer some insights. When Bitcoin breaks 100,000, there's going to be a surge in trade. You will naturally get a surge, probably, I'm going to say, up to 103,000. That's where I would go. And then everybody's going to start talking about Bitcoin, what's next. And that's where everybody's going to come in and start buying additional Bitcoin. And it'll be about that time that the hammer comes down hard, and you'll probably
Absolutely.
trade back into the 80,000 level. And that would be my forecast. But you were talking about that type of trading mentality that's out there doing the pips and trading. This is the type of psychology and sentiment that gets into the markets. And I would always tell my friends that were in that world, every boat at the bottom of the ocean is watching the chart room that you're watching. We all have the chart, we all
Right.
see it, and they become self-fulfilling. It breaks a certain level, it breaks the 200-day average, and everybody jumps in, and then squash, is the move. And you've
Right.
got to be aware of that, that there's a much larger marketplace out there that looks to take full advantage of those moves.
Well, that's why I said you got to see that retest. The people that go too quick, don't try to pick up that penny in front of the steamroller. Allow it to make its move to 103, allow it to pull back, and then you get in. Following Bitcoin at 100 is about the most foolish move that I could ever imagine. It will be interesting, though. The only thing I will say there is that, where there is, and you'd have to tell me, I don't know about this in the Forex world. In the crypto world, because you have true order books that you can see on the exchanges, there's no dark room, so to speak. There's no black market type thing. You're able to really see sell and buy orders. Now, they get spoofed all the time, don't get me wrong, but you
Yeah.
see what's there a lot, and they tend to be right, and more in crypto than I've seen in other ways to look at it. In Forex, do you guys have that transparency, or is it not?
You have depth of market that you can see in the particular exchanges, and there's over the counter markets. It's a blending of both of those, right? In the currency markets, and it's self regulated. However, in the electronic space, what you don't get is the spoofing. That is strictly prohibited, as
Right.
you've seen
Absolutely.
from the recent cases in the markets, not
Yeah.
only in currencies but in commodities, and that still is very prevalent in the crypto space. And
Yeah. Absolutely.
that's something that, when you trade on depth of book, you have to understand that that liquidity can suddenly be a mirage.
So in crypto, what makes it a little bit easier if you know what you're doing is you can follow actual wallets. So I don't know who it is, but I can see that somebody just moved, 100,000, moved 1,000 Bitcoin that haven't been touched since 2010 to an exchange and put in a sell order at 100,000. That it could be a spoof, but usually those have played out. These are the things where in crypto you have a little bit more transparency, and that you have retail traders have more access to that data than I feel that they do at inexpensive costs in other markets. Like, you can get that information in the stock market to an extent, but you have to pay for that data at a usually an expensive rate. In crypto, you can API directly into accounts and see this information out there. So it's rather interesting, because like that's what I've always followed and why I've had good success. In fact, Steve and I got out of Bitcoin at 19,900. It hit 20,000 and dropped down to six. We did it again, a few other times throughout the years. And part of that is that you can sort of see when something out of the ordinary comes. You know what I mean? Because you know who did it. It's not just an order, but you can match it up. Okay, this wallet did this and now has a sell order sitting here. And you can see that transparency there. So it's a little interesting. And my other thing at 100,000 is I think it's going to take a lot. I think we're going to see what we've seen today, what we've seen yesterday. We're not doing it on one felt swoop. We're going to hit that 98, 99 that we're at now. We're going to hit that wall for a while, and we might even hit it and then drop back down to 90 before we make that run through 100. It's just
Okay.
because there is a lot there's a lot of sort of profit taking. You know what I mean? There's a lot of
So
profit taking
the,
going on.
the,
Um,
the downside to having the transparency that you're talking about is, how does a large fund manager execute a large trade and stay hidden from the market space?
well, what they'll do is they'll use IBIT down the road. You know what I mean? And there already are. I mean, we're seeing $2 billion in movement on IBIT options a day. So that's what's going to skew it now. That's why I said I don't know if it's the same as it was. Is we didn't
Well,
have the access to the market. The only access you had to the market was CME futures, and they did what they did, but they didn't do much. Um,
I'll offer them this then. In an option traded world, what sort of can you do you have a transparency into the option side of the market? So I would view in the currency markets, if we were at this particular type of level that the Bitcoin is at, we would say that the knockout options alone on a touch of 100,000 will send it much higher.
Right. Yeah. No, I could see it. And there's so much stuff in play in Bitcoin right now because there's so many different areas that real people in high wet net worth individual. I mean, what I would say is the perfect example is Michael Saylor said he had a 20-minute conversation with an investor yesterday and sold him $500 million of his convertible bonds. You know, what we're seeing is there are a lot of huge private wealth into, offices and stuff that had no exposure and that now are getting in. And you know what that, like you just said, the numbers that these people do that are coming into the market is so new to the market, that's where I worry about that maybe it doesn't do the 100 to 80. I think it should. Everything there says it to me, and exactly I'm at like 104. I think it gets up to 104.5, and then that's where it will blow off, and we'll see the big retracement. But I just wonder with companies like Michael Saylor's meeting with Microsoft's board to discuss to them about how to buy Bitcoin for a strategy. Whether they do or not, I don't know. He spoke with Tesla; they bought $1 billion worth. That those are the type of things that are at play right now that are just at a bigger level that are just different to me. That I don't know that we've seen that type of thing where it
And
goes to
I
that.
hear your excitement as you're explaining these things. And I come from a marketplace that trades $7.5 trillion in one day. And
Yeah.
when someone's putting $1 billion position on, it's like, whoa, 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 that's okay, good. That's great, but it's not necessarily having a lot of impact. It's going to be an interesting space to watch. I think you and I both agree there's an evolutionary process here in the adoption, but primarily before I think you're going to start seeing the big money come in that's required in that space, and is going to have to be some regulations. And again, there is no lender of last resort. So what happens when somebody fat fingers a trade, which we've seen in many times over many years in currency markets, when someone fat fingers a trade at 5:30 in the evening as the value dates change, and instead of putting in 100,000, they put 100 million in to a Turkish lira, and
Yeah.
the price moved 9.5% in a minute.
Yeah. No, there are definitely regulations, self-regulation like you talked about in the currency market needs to happen. There needs to be a shared order book. I think we'll see it here in the US first before we see it other places where companies that are SEC regulated like the Coinbases and Krakens and Geminis will come in and realize that having one unified order book is an answer, as opposed to every exchange right now has its own pricing, and there's arbitrage. It's not as big as it used to be, but I think and I think it's going to happen because there's also not enough Bitcoin for them all to do it the way they're doing it right now.
I don't like central order books. Sorry, it's one of the things I'm definitely not in favor of. I believe a fragmented market space offers the consumer more choice, and it also makes a more competitive price in the world. Whereas a single order book, you're paying a vig on every single transaction to somebody,
Right, to somebody. Yep. No, I agree.
and
Yeah. Well, but in crypto you already do, so there's no free trading in crypto. So you're already paying it. That's why see crypto is so weird because we talk about it about being cheaper to move than the US dollar, and it is if you're moving small or large amounts to different countries. But when it comes to actually making a transaction, Coinbase still takes 10%. You know what I
oh
mean?
yeah,
They do have VIGs. They do still. So that's where they've fallen behind. That's why they don't want BlackRock coming in or Schwab because they all like where they're at when it comes to their fee structures. That's why they do well. I don't know if you saw Schwab's new CEO came out and said as soon as there's more regulatory clarity, they will sell Bitcoin. They will be a crypto
yeah.
exchange.
And that's the whole point. As soon as there's more regulatory clarity, and again, you're educating me so much in your space. I often looked at and hear that the DeFi space is very active, and I
Yeah.
believe that that's off of the exchanges, and I think that that's an area that will offer consumers alternative ways in which to execute outside of these regulated exchanges.
Absolutely, absolutely. DeFi is one of the biggest areas that, and it's not what people think. It's not the crypto DeFi that was already in place, so to speak. You're going to see it used more in traditional finance to lower the cost, the cost of entry, to take out intermediaries that aren't necessarily needed, like you just said, where you're paying a vig to everybody along the way. That's the promise that DeFi comes, where if I want to lend out my Bitcoin and you want to borrow Bitcoin, we have a way to do it peer to peer using smart contracts, and nobody makes money but us, between the transaction. And that's where the future is. With that, I am going to let you go, Mr. Flanagan. I do appreciate everything. Anything I should be looking at over the weekend? I have you back in here Monday morning early. Anything we're worried about or looking at?
Well, I did want to just emphasize one more point. Today, you had the Japanese Prime Minister, the new Prime Minister, Ashiba. He did come out and he's preparing a $90 billion stimulus plan for Japan to
Oh,
boost their
wow.
economy. Now, that is the second time. Last year was just slightly lower than that. So, in looking at the world, and we're talking that we have restrictive rates everywhere in the world except Japan, why is Japan still adding massive amounts of stimulus, having fought deflationary forces for 20 plus years? Very interesting to look at Japan and keep that always in your foresight, because I believe in the monetary world, they are leading. And this is where, as you've heard me say,
Okay.
restrictive rates need to come lower because economic growth is beginning to lag behind. Howard, have a great weekend.
You too. You too. I'm going to bring in Paul, my main man when it comes to the labor market. Stephen, thank you so much. Let's transition here. Paul, how are you doing? Welcome to the show. Oh, I'm not hearing you. Let me just see here. Oh, I have you muted. I don't know why I don't like you, Paul. There you go. I still don't hear you, Paul. Hold it 1 second here. Let me see. That might be on my side. Can you try talking for 1 second? There we go, Paul. I got you now.
All right, Howard. How you doing? It's good to see you.
It's good to
Thanks for
see
having
you.
me.
I'm going to transition back to that one right there. Get your name up on the board. How are you doing today?
I'm doing pretty well. I'm doing pretty well. End of a crazy week. Was traveling a bit. Was up in New York. I saw your friend of mine, Mr. Stephen Orr, and a few other people. But yeah,
Awesome,
back in the saddle
awesome.
here.
Yeah, Steven up there getting some big awards for for Quasar Markets. Very excited for that. So,
Yeah, absolutely.
Paul, we brought you in today because you are a labor expert. You are the CEO and founder of Hire Capital, a executive search firm, and you have been giving me some great insight on our Quasar Slacks about what I should be looking for when it comes to the labor markets. And I was hoping that you could bring a little bit more insight into the numbers that came out yesterday, and more than that, what you're sort of seeing out there in the labor market right now.
Glad to do it. Let me give you sort of a thought. So first of all, Hire Capital. I see a variety of um, employment categories, right? Our focus is technology, accounting, operations, sales and marketing. We interface with a group that does healthcare, and so we have, a pretty wide spectrum, if you will.
Yeah.
And what I've seen is the labor market certainly seems healthy, doesn't it? You hear the unemployment rate as low as it is. Um, there's a group I'm a participant of for years, the ISI Evercore, and labor group, and we talk, once a month, and we measure it. It all looks pretty good, really. However, to be honest, based on what I'm seeing and the people I'm speaking with in companies and organizations across a pretty wide spectrum, I really think there's a bit of a hidden labor crisis going on. And I'm going to tell you where I think it is. I think if, and this may be more what you and I see day to day, but mid-level, senior level professionals in the professional ranks have been having a hard time. If you are let go or something changes at your workplace, finding a job is a long haul, and it is longer than people would think. So sure, what we've seen is bulk layoffs right? Bulk layoffs that we saw in most of 2023 and a lot of early 24, those seem to have subsided. That's good news.
Right.
Big corporations, 10,000 at a time, 2,000 at a time. But now we're seeing sort of these quiet layoffs, smaller groups being let go, or attrition not being replaced. And it's really had an impact. So I don't know what's going on with the DOL, the labor statistics, but I think a lot of it is participation rates, people withdrawing from the labor market, waiting this out. I do have some light at the end of the tunnel we can talk about later, but that's my starting premise is that the labor market is not as healthy as it seems, and there are signs of weakness in areas that you would expect to be strong.
And that, you brought that up yesterday. I was looking at our notes, and it's definitely an industry to industry thing that we're seeing. And I've seen that. I've seen certain friends in different industries that have changed jobs, and there's a lot of movement. Retail sales and things like that are seem to be have good hiring. Hospitality has been up, and things like that. Of course, still recovering from COVID. But then, and certain parts of tech have been good. Developers are at a high demand. I've seen my friends that
Yeah,
are that
maybe
actually
AI
write
and
code.
that's right. That's right.
But other, sale, when it comes to executives, especially business development executives, things like that, they're really having a tough time. If you can't provide to the bottom line, it seems like whether that be production or something
Yeah,
else,
that's right.
you're having struggles.
That's right. Like a bright light in all of 24 has been healthcare. Understandably, with the aging population and focus on healthcare, if you're a healthcare professional, there's a lot of jobs. So and that has buoyed quite a bit these labor reports. If you look here a month in and month out, a lot of the numbers are coming from healthcare. And strangely, throughout the year is in government. 2025 may look a little different, but government employment has gone up quite a bit. You also see a few things in like, despite hospitality being down, restaurants are up.
Right.
You've got all these sort of nuanced, unusual things going on as we adjust in this sectoral kind of shift that we're seeing. I do think what is most interesting to me is projecting ahead.
Right.
We can talk a little bit more about where we're at, but I do think 2025 has some light. And I mean, obviously, we're going to have deregulation. Capital activity has been very low, as you know.
Yep.
Debt opportunities, M&A, these things I think will unfreeze. And there's a lot of pent up demand and desire. There's even companies that I know, small, medium, and large, that have projects they want to embark on. And in many cases have been, we just have to push it because right now we're running in place
Right.
just to get through until things get better. And I think that will happen slowly, incrementally in 2025.
Now, do you think so? My only concern there is I know that you're in my area here of DC. Under
That's
the
right.
last Trump campaign, the Trump administration, there was a lot of empty offices in those federal buildings. And my co-founder at
That's true.
ABCA was at that time one of the highest civil servants in the U.S. Treasury, and he left because there was, literally, no help. They just kept on laying people off, or they left and then they never brought him back. Do you think that's going to happen this time, or because of the way he wants to make so many changes that he'll have to put people in place to make those changes?
I think it's a combination. I think what we're going to see is a effort and a drive to reduce the size of government. Obviously, we know about the DOGE.
Yeah.
So, but I think that those things will take time, and also that's one regional area, right? DC, where you and I are kind of from, and I'm based there. We'll see some hits, I think, in the government side, but I also think there's a lot of commercial sector in the mid-Atlantic region, and of course nationally, that will benefit from the M&A activity, the capital infusion.
Absolutely.
Yeah, and I think that'll compensate for it. I mean, just to take a moment for our friends in the DC area, I do think it's going to be a very intriguing time. I don't think it's, inauguration day and then, thousands of people are laid off. I think there'll be some time, and there'll be some people relocated out of the Department of Interior, probably be one of the first ones. So it's going to be interesting to see how that counterbalances what will probably be very beneficial things going on in the commercial sector,
Right.
with more
Well, I would think that you're going to
business
see a lot
activity.
more of the Beltway bandits, as I call them, hiring and doing it. The Cohn Resnicks of the world and those folks,
Exactly. Yeah.
Guidehouse and such, will be staffing up for sure. Especially with such a big change on the horizon across so many of the different committees. Again, being involved on Capitol Hill with my nonprofit on crypto and blockchain. All those committees are now flipping to Republican control, so you'll see a lot more
Right.
different lobbying groups, different groups in things there too.
Yeah. Yeah. Agreed. One thing that also happened in the labor market I wanted to mention to you is, unlike prior years, even 2023, when things were starting to, be impacted, is wages have, moderated. Meaning, for a long time, you think about the COVID years and people were working remotely and making demands, and things started to, go a little crazy with wages. Those we'll see people go for laterals. Some people will take a cut, and increases are not 20-30% anymore. They're
Right.
3 to 7. And I think that's going to help with labor costs for these corporations, just expenses in general, and moderate inflation.
Do you
We're
think
already
we'll
seeing
we'll
some of
see
that.
the sort of a slowdown of the labor unrest, so to speak, the Boeings, the port strikers? I know Sean O'Brien, good friend of mine from growing up, believe it or not, the Teamsters president there.
Oh, really?
I always
Okay.
would hang out with him a little bit in D.C. when he's in town. He was in there for that UPS for a long time, and I would have some drinks with him. He always made it sound like this is a new revival of the unions. I wonder if that now
Right.
does that change dramatically under the new administration?
Yeah, I mean, that's a good point. I mean, 2024 was quite a year of well, it all started in 23 with UPS, as you know, and then we had all these other Boeing and, I guess, FedEx, and everybody, right, got in on it. I think that was a bit of a renaissance, and I do think that that will quell. I think a lot of these larger labor entities, their contracts came up,
Right.
sort
So
of at
it's
similar
so it's
times,
worked
and
its
one
way
was sort of,
through for the next 5 years.
yeah, and they were like leveraging off of one another. It's like, hey, if they can get it, we can get it, right?
Right.
But I do, yeah, I do see that potentially even from the administration, being kind of calming too. But yeah, that has been a driver that, of inflation for a while here. A Boeing strike was pretty big too. That really hurt that company for sure.
Right. Yeah. No. I mean, I was looking this morning. I hadn't realized that Save had been delisted yet, and I just had it on one of my watch lists because it was one of the ones we were watching for stuff, and it's just blank. And I
Right?
just think about,
Is
you
it long
know,
out? Wow.
how did that help us? How did the FTC and Miss Khan help us or help anybody, the consumer or anybody, in the fact that all those, and I guess I didn't realize too that it's just done. Like, I thought, because in
It's
crypto, even when
crazy.
stuff crashed to zero, it doesn't go to exactly to zero, and people
Right,
trade
right.
it. I'm like, wait a second,
Yeah,
it's just gone.
that's crazy. Yeah, I mean, I think that what we've seen with backloading, I guess I would call it, right? Even in the last few weeks out of the current administration, just let's push these things out, right? The Google thing, there's been many, really,
Yeah.
let's get a bunch of lawsuits in place. And I don't know how that plays out in the new administration. What I understand, maybe you know more about this than me, Howard, is that it is actually going to have to play out in the court system. It could be like,
Yeah, they
dismissed
can't change the
ultimately.
court
They
once
can't
the
just
once
pull it back, right?
Yeah, that doesn't Trump can't pull that back. He can influence it. Prosecutors, will have a much more friendly prosecutor in New York for the New York Stock Exchange
Right.
and things there. We know, but yeah, no, the ones the big rush, as is to get the dollars out because you can stop those at any point and say, okay, no more funds towards the Chip Act or no more funds towards this, and they're gonna get those out there. I know people again in the current administration and at some of these spots, and that money's going out. You'd be amazed at how quickly they can move. We saw it during COVID. They when Treasury wants to get money out, they will quickly get it to the people's hands that they want it to get to, and we've seen that start to come out. Um, And I guess the other part I was thinking a little bit more about the labor side from under the last Trump administration. It wasn't really the head count that he killed; it was senior head count, and it doesn't seem
Yeah.
like he's on that hell bent thing. I think it seems doesn't seem to be there. So after thinking about what you said and then thinking back a little bit, it was really at that higher level where he did it. Which I wonder if they'll try again because let's face it, again, I've seen that hiring practice when I worked for the liquor distributor when we would lose a high paid executive in quarter 3 or 4, we'd say, yeah,
Right.
everybody will pick up the slack and we'll hire someone in January, because it's quick
Yeah.
savings. So
Yeah.
I wonder if that's the only thing that scares me is how does the DOGE group come in and do they say, hey, headcount's the easiest way to do this?
It might be. I mean, we'll have to see. I just think it's certainly a lot easier said than done, and it's
Oh,
going to
yeah.
take a little time to work its way through.
The other one, I
Um,
have a friend that's high up in the properties division within, Interior where they run the buildings that we see throughout DC. There's a
oh yeah,
lot,
yeah,
a lot of value in property that the US
there
government
sure is.
holds that certain
Sure
people would
is.
like to see them unload some of these buildings that maybe are not needed anymore. I'm wondering, that's the other thing I'll be watching in general under the new administration that's just sort of weird that you wouldn't necessarily think about, but that do we sell some of this office space in DC that we have, New York, other places?
Yeah, yeah. I think that if you look back, in the DC area, not to for anybody out there, not to make this all DC, but after COVID, it took a long time for the government to go back to office,
Oh yeah, they're
and
still not
and
all
certainly
back.
they're not all back, and some of it's hybrid. I mean, for the people that know the Beltway and I-66 and 395 and 95, these things used to be crammed every single weekday, and now it's Tuesday, Wednesdays, and Thursdays only, and it's not as bad as it ever was.
That's
So
funny. That's
I do
funny.
think
Yeah.
that the city has come to life a little bit more, which is nice to see over the last three to
Yeah.
six
My
months.
problem was for years I lived just outside in Arlington and had to go by the Pentagon,
Oh
and they
yeah,
never lay off anybody.
that's
That
that's you
traffic
always have
comes
that.
24/7.
Yeah, yeah, yeah. I'm in Arlington right now, as a matter of fact.
There you go. One
Almost
other
right now.
question I had for you on labor, also is, do you see a surge or a resurgence of trade? What I'm seeing is people pushing their kids to become plumbers, electricians, contractors. That is very different than 10 years ago in my friend class. You know what I mean?
Yeah, yeah, yeah. It used to be like, get the kids into STEM, right?
Yeah.
And become a data scientist or something. And there certainly that is definitely an increasing, area. But I do see that. I have also seen, let me tell you where some of it may stem from, is the individuals, there's these groups that have been going out and buying these, cash flow
I was
businesses, right?
reading
And
about that in the journal like
things
last
that can't
week.
be it can't be replaced by AI, right? You've got
Right.
a toilet that's clogged and there's something wrong, and you got to call a plumber. The electricity's not working. You got to call an electrician. Clothes have to be washed. You got a laundromat and
Right.
wash and fold. These fundamental core, like ancient, almost blue collar like businesses are getting more robust, and they're actually starting to see. I don't know. Are you familiar with Dry? Just to give an example of one
Yeah. Oh
area.
yeah.
Yeah, right. Where you bring these businesses together and then you offer it under one marketing umbrella, and yeah, but I do see that area increasing, and it's like I said during kind of the slower times in 23 and early 24 is like if you can do stuff with your hands, right, you know that you're going to be employed. I didn't see any
Yeah.
layoffs in
It's fun you say that.
electricians to advanced people.
When I was
Yeah.
growing up, I worked for a catering company, and the head chef there told me, "Well, I'm teaching you skills which mean you will always be employed. People always have to eat." And I've always said that, and I tell people that all the time. It might not be the most glamorous job or that, but if you do know how to cook, as a chef, there's always a need. Somebody always needs to be fed.
There's another area that of employment. I got involved in restaurant partnering in the DC area, so I'm involved in some restaurants. But you've also seen really coming across the country is the fast casual movement, the
Oh yeah.
Cavas, obviously Chipotle's, Chopped, and I think that there was a shift during the pandemic where people were like, I gotta have something. I can't make all my meals. I gotta have it delivered, right?
Right.
Uber Eats and DoorDash, and that part of the marketplace has soared. And as a result, employment in those sectors is very robust. Go into a Kava and you'll see a help wanted sign, you know?
Oh yeah,
So,
that
yeah,
without a doubt.
restaurant workers kind of across that. Yeah.
Yeah, and DC, it's been a lot of chef driven too. Again, I come from that world and owned some restaurants in DC over the years. Chico, one of my couple of my good friends, Danny Lee and Scott Druno. One was running Wolfgang Puck's. The
Oh,
Source
yeah.
was his head chef for years,
I
and
love that place. That was a fun
yeah, and
place. Yeah.
Danny's family owned Mandu, which was a little family, Korean restaurant, towards Adams Morgan. And now they're the hottest thing, and that style is. And I see that. Restaurants I think are going to evolve. You're going to see a huge push into that QSR, like you just talked about, where there's upgraded
Yeah.
options, chef-driven options. People like Jose Andres will have these places that you'll be able to go in and you'll get a great meal that you put into to go and you take it back to your office, so to
Yeah.
speak, or
Well, I
home.
know, right?
And
Hmm.
then and then what never goes away is fine dining. It's the same thing. There's always going to be the have do's are always going to want to go to Morton's or Capital Grill or the restaurants like that. So those are the two that I find. I think the Applebee's are going to be under pressure. It's those restaurants that
Yeah.
fall just
The country
above
get
your
down. Yeah.
QSR because people don't want to pay the tip.
Okay.
I don't. It's if I'm gonna get a burger at Applebee's and I can get the same one to go from Red Robin, but I save 20% on a tip. That's not a bad deal.
I haven't been to a Red Robin in a long time. That brings back memories.
I spend half my time in Ohio now, so I'm in the world of chain restaurants. It is one of those funny anomalies because, as you know, in DC we have almost no chains. You have one cheesecake.
Right,
Fridays have been gone for a while. There's no Applebee's in the city limits and stuff like that.
right,
And then I moved to
right.
to Dayton, Ohio, where everything is a Longhorn, a Texas Roadhouse.
Yeah,
It's all chain restaurants, and there aren't many great independent restaurants, unfortunately. Yeah, I really appreciate you coming on today, Paul, and giving us more
yeah,
insight
we can
because
do
we
it.
see these labor numbers, but I think they've been
Yeah.
misleading. You've been talking about it in our Slack channel. That's why I wanted to get you on. I do think that the market has a little bit weakness that isn't really being seen yet, and I guess I would ask you, it's really, and is it going to be? It sounds like you've already said this, but it's going to be harder for that level that is being quietly laid off right now. That mid-level to lower upper level executive that's losing the
Yeah,
hundred
it's a
thousand
senior.
dollar job is going to have trouble
That's right.
finding another $100,000 job.
Yeah, I mean they're out there. It takes a long time, longer than it has, and it can be very frustrating for some of these folks. I mean,
Are
we
are
work with
you
people all the time. Yeah.
are you seeing the cost of acquisition of labor going down in this case for companies that are
What,
looking or
somewhat. I mean, what's happening is, and this is sort of counterintuitive, I suppose, is that because there are so many people looking for jobs, that everybody thinks they're qualified for everything.
right?
So you put a listing out or whatever, and you're going to get just inundated. People are telling me we're turning off our job postings because we got too many people, and it becomes very difficult to sort that through
Right.
for the internal HR people or the hiring managers in many cases who get involved. And this has actually kind of helped us a little bit because it's like,
Yeah.
we give up. We'll pay a fee, a one-time thing, just to get the right hire. So yeah, it's an interesting kind of you tell somebody if you have any, I'm looking for an AI person,
Oh yeah.
who's developed an AI for a year, and then you get somebody who, programmed in COBOL 40 years ago will apply, so
Hey, listen, I heard my COBOL programming is back in need because I don't know if you saw Elon was pointing out that like all these computer systems, and I knew this already, that still are being used in the government are literally
these
COBOL
legacy
based.
systems, yeah, COBOL DB2, baby.
My 1985 DePaul computer science education is finally needed.
There you go. We can get you a role anytime, pal.
Well,
There is
Paul,
one other area I
yeah,
wanted to mention to you if you have just another minute that we didn't
sure.
hit on that I think is important. I was thinking about this last night. We just don't know the impact as we talk about going into the lower levels of the labor pool, like cooks and people to put the rice in the bowl, the kava, and work on stocking the grocery store shelves. It's a lot of impact of immigration, and
Absolutely.
if and that component of the labor market isn't measured very well, in my opinion. I think the DOL is missing a lot of things right now, but that's one of them. And so, if there really is a slowdown of immigration, which I expect there will be, and even deportation, it just depends on where that is.
Right.
Or is the deportation going to be, for areas where, people are in the streets, right?
Right.
Illegally here, or is it going to be, people doing labor that may be also illegally here and in the kitchens and such? And I don't know the answer, obviously, but I think that's a wild card that will be interesting to see how it plays out.
It will be because nobody wants those jobs. As someone that hired for those positions and can tell you that my kitchens in DC were 90% Honduran or Guatemalan,
Mhm.
that is the biggest source. And yeah, and like you said, there's a lot of hidden things that people don't know. The amount of jobs they're actually doing that are reported off the books, and
Right.
and there, or how many jobs one Jose Vasquez has because he uses his ID and his cousin uses his ID and his other cousin
Right.
uses his ID. So yeah, I do
Yeah.
think that that is a big unknown. And I think that's a worry that I keep as an overhead for McDonald's and some of these others because we're seeing it already in Ohio. They can't hire at the Wendy's down the street from me. They've closed. They've shut down hours. They've literally
Wow.
reduced their hours
Just can't
because
stand it. Yeah.
and they're paying in Ohio. They're getting close to that $20 level, and we're not at we're not a high minimum wage area like
Right.
DC. Minimum wage is $15. Seeing a $20 pay is not unheard of. In Ohio, where it's like 11, it really was.
Yeah. So it's just supply and demand
Yeah.
is the issue, and that could also impact inflation. And there's a lot of unknowns there.
Yeah.
I think obviously that, much like anything else the government does, with all the best of intentions, it's going to be a
Right.
slow
Yeah. You just
process.
never know the
Right.
ramifications that are there, especially
No.
and like you said, that's a big hidden industry. In the hospitality industry that they do so much that people don't realize. You just mentioned DoorDash. I've seen all the articles about how in New York, it's one of the ways that they're able to work is again they use somebody's
Yeah,
ID.
they're on these bikes, and yeah,
Yeah.
who's checking them out? Yeah, I
And
think my hope is that let's slow the roll of incoming. Let's find the
absolutely
less productive, and then maybe the people adding to the economy can
can
stick
stay.
around,
Yeah,
build
yeah, and one of the
livelihoods.
big misnomers there, just that I'm sure, but that our viewers might not, is that illegal aliens that do work and use somebody else's ID or whatever, they actually pay taxes, and those taxes are never going to go to, so to speak, are never going to be realized on the way back of Social Security or something on the back end.
Right, right. Yeah, interesting,
Yeah.
interesting, for sure.
Well, thank you so much, Paul, for joining
Yeah,
us.
pleasure. Thanks for having me, Howard, and anytime, and
Yeah, we'll have you back in as we get closer
hopefully,
to the inauguration and we see what's going on there. Thank you so much,
all
Paul.
right.
Have a